This is Justin Grado, and this is another one of our Phishing Fridays. And today I'm joined with Jesse Hill of Tier 3 IT Solutions, the president and owner. And today we're going to be talking about accounts receivable fraud.
This is a really important topic because any of our business clients and contacts out there, I'm sure you all have accounts receivable that you need to manage. And if it's not managed well, or if you fall victim to some type of fraud, it has a serious impact on the sustainability of your business, your ability to meet your obligations, and I mean, let's face it, to continue operating. So let's dig into a little bit. What do we know about accounts receivable fraud?
Well, accounts receivable fraud is it's less detectable than accounts payable fraud, and it's typically perpetrated by an employee. But when we talk about from a cyber perspective, what we're looking at is the attacker impersonating or spoofing a member of the accounts receivable team to a customer so that they intercept those funds, change payment details, and get what the customer or the client is sending to you to them.
I'm reminded, and if I had to think back, I mean, this was a long time ago, maybe 8 or 10 years ago, but it was probably one of the first cases that I got pulled into. And I remember getting a phone call from a local business owner, and they said, Jesse, I think my accounts receivable person is stealing from me, and I need you to come over here. And I was like, okay, sure. I mean, they were in a panic. So I went over and I said, okay, tell me what you think you're seeing, and so what had happened was the accounts receivable person was on holiday, and they opened up, the business owner opened the email account and said, look, we just received an e-transfer, and it's asking if I want to deposit it into the TD bank, into TD Bank. And they said, I don't bank at TD. I bank at RBC. So I think this person's stealing from me. And I said, okay, well, just calm down a moment. Just, all it does is show the last bank that was used. So maybe they received a personal transfer and they put it in TD, and now it's just defaulting to that. And so we spent some time, digging into it and looking into it. And we did discover that it was most likely accounts receivable fraud. And what the employee was doing was they were providing services to their clients. They would create a legitimate invoice, send that invoice to the client, and then when the payment came in, they would deposit the money into the employee's personal account and go back and delete the invoice. This was, a very, hands-on manual, type of, process and fraud. And it ended up costing this business, I think it was somewhere in the neighborhood of about $200,000 or $300,000 that they ended up, charging this employee with, and it had a pretty serious impact on that business while that was happening. So, that's a real world example. I'm curious, what other kinds of scenarios might somebody end up in or watching for?
That's actually what you've described there is an example of skimming, it's called, where you're kind of intercepting the AR payment before it kind of enters the accounting system. It's like, intercepting the check and then depositing in your own account or whatever. The whole skimming thing. There's also what's called lapping. And this occurs when an employee will receive payment from a customer and then pockets it directly. And then the next payment that comes in, from another customer will pay the first invoice, and then the next one will pay the most and it keeps on going and going and going until either they get caught or they find a way in which they're going to kind of write off or hide what they were doing. Which leads me to the next one, which is fraudulent write-offs. And this is actually a way in which account receivable employees will credit a customer's account for a discount, a return, or some other form of write-off. And this technique is actually used to conceal forms of fraud like lapping and skimming. So it's kind of like the end, it can be an endpoint for that.
So I think what you're describing there would be, so the scenario would be, let's imagine you invoiced me for work for $10,000.
Yeah.
I'm sending in my payment, but when you receive that payment, you're going into the accounting system and saying, "Oh, I'm giving you a $2,000, discount."
Yeah.
And somehow,
I get that discount, or like if I'm
somehow
that accounts
taking that
receivable person.
$2,000 payment and moving it somewhere else. Yeah, it's interesting. And that scenario, similar to the story that I was telling, and the other one. I mean, these are all, the transactions are done by computer, right? The invoices are created on a computer, the payments are sent by computer, but the theft is a manual process. It's overriding something. And so we talk a lot on, about how do we prevent these types of things, and really you've got to have some systems for reviewing your accounting.
Yeah, 100%. Prevention always starts with awareness. So what we're doing today, kind of raising awareness of these types of accounts receivable fraud, and then identifying like areas in which your processes don't have someone looking at it, don't have someone double checking. If there's one person who is only dealing with um, a certain aspect of the payment, especially on the front end of like receiving it from customers, and there's no kind of oversight along that path, um, then yeah, these types of processes will actually either prevent it and deter it or catch it in the act, right?
It's one of those things that I have found very interesting with the rise of Interact e-transfers.
Yeah,
Is one of the simplest ways I think that businesses can help protect themselves is to set up auto deposit
yeah,
and to define very clearly that your business will only accept e-transfers to a specific email address, and that when the transfer goes to that address, it automatically gets deposited in your bank account.
yeah,
Um, I've I've worked with a number of our clients and other nonprofits, and it blows my mind when they tell me, "Oh, just e-transfer to Justin at." No, no, you've got to protect that payment method. You we would never let you take the credit card to your personal account. So why do we do it with the
yeah.
e-transfers?
You've set up your e-transfer the right way, configured that way, with auto deposit set up. It's more secure than cash. It's more secure than the client, actually walking you over a stack of bills and giving it to you, right? Because it's automatically deposited. There's no failure there, and um, it's going to be accounted for. Like it's going to show up in your financial statements.
One of the other things that I'm looking at the notes here, and talking about reviews and audits and those types of things, and so it's probably really important when you're looking at your financials to not just look at your accounts receivables, those types of reports, but also see if you can produce any kinds of reports that shows you invoices that were voided or discounts that have been applied. Because you want to make sure that you understand why, in what circumstances is somebody, a client, paying less than we expected them to.
Mm-hmm. A good thing too to watch out for is the signs that come from employees. If you have someone in the accounts receivable team and they're showing signs of maybe financial struggle, they're going through a major event like a divorce or some type of event that has some financial implications, or they have some creditor issues, those things can be a good indicator of, hey, there might be some red flags, and I might not want this person tempted by this, being so close to this money coming in, right?
I probably listen to way too many true crime type of podcasts, but I feel like the other thing you need to look for is on the opposite end of the spectrum. If there's an employee who's living well above their means,
Yeah, that's true.
as the business owner, you know how much that person earns and what kind of lifestyle that should afford them. And if that doesn't match up, and there's other reasons.
Yeah.
You have an inheritance or a side business or a very wealthy partner or any number of things, but you might want to understand, how is that person living better than that person making the same amount of income?
Yeah. If they're bragging about their new Ferrari, where'd you get that money?
Yeah, any of those things. So yeah, the accounts receivable fraud, really important to, pay attention to those details, to, make sure that you have, good processes and checks and balances in place. And then, like we said, automate some of the things that you can, like auto deposits on e-transfers and those types of items.
Well, thanks, Jesse, for joining me to talk about accounts receivable fraud today. Again, I'm Justin Grotto, and this is Jesse Hill with Tier 3. And thanks for joining us, everybody, and we'll see you again next time.
All right. Thanks, Justin. Have a good one.